back to Pitch Us. We got a really special episode this time. I'm joined with Jeff as always. Jeff, why don't you do a quick introduction?
Yeah, thanks, Tim. Jeff Erickson. I am the head of partnerships at Forecaster, a company that does financial modeling software to help make financial modeling easy for startups. Also, an angel investor and Tim's co-host.
Yeah, let's go. So, guys, we're really excited about today. We've done a lot of these episodes, and one of the things that we're really interested in doing is really helping people put together their whole story. And we also always get feedback on things that we like and don't like, but we want to kind of give you guys more of a template this time, maybe someplace to start. And then we're going to talk about what problem areas we see per slide. And so the deck that we're going to be using is in my book. I'm the author of the pitch deck book. So you can get it there. It's online all over the place. So it's really not that hard to find, but that's kind of our plan for today. And so why don't I share my screen with you guys and then we'll get started. So.
Perfect. And I'll just say that Tim and I were on another podcast with somebody just last week, and there were so many of these questions that came up. So it was fun to talk about. And so that's what prompted this, where I think we can provide some value in just going through a pitch deck and talking about some of the problem areas, like Tim said, that we see pretty often.
Like everybody, Jeff, can you see my screen?
I can see it.
Okay, perfect. So like we said, this is going to be more like a template. And yeah, we were on a podcast with New Chip. Hopefully you guys check out that podcast. And this really prompted this idea of maybe we can go through just blank slides and give you some of the things that we see a lot per slide. And so starting off, so I do all the deal flow for Park City Angels. I've been doing that for a little over 4.5 years. And one of the slides that they recommend is an overview slide. This is not very commonly used. However, the people who use it actually really, really like it. And Jeff, you guys might see when we're doing this that we're usually taking notes. And not only the notes that we're taking are about like how can we help the person, but when we're screening deals, we're taking notes. And usually an overview slide like this can kind of get the big picture items like what's the ask, what does the company do, things like that. Jeff, have you seen people use these, and what are some common mistakes that you might see in an overview slide like this?
Okay, the one thing that's kind of interesting here is I think we're 20 plus episodes into the podcast, and I don't think we've seen an overview slide in any of the decks yet.
We have not.
So this is kind of cool. I actually like this opening up with the overview slide. I honestly haven't seen this done a lot. The few times I have seen it, I've really liked it. And I guess the one thing where you could get into a trap is if you spend too much time on this slide and all of a sudden it takes away from everything else in your presentation. So I think you want to keep it, high level, just hit key bullet points. Don't spend too much time on it. But I think it can be really effective.
Yeah, I agree that people who have done this, especially since Park City Angels requires it, is they spend way too much time on it. You should spend no more than 10 or 15 seconds. So basically, you're going to have like that first title screen with your logo and maybe a little phrase. And then you could go into a slide that says, hey, here's a real quick overview. This is what we do. We're raising $2 million. Let me tell you about the company. And that's all you need to say about this slide because we're taking notes and we're excited to hear. One of the things that
sets the stage. I mean, that's what I like about it. It kind of sets the stage of here's kind of a quick overview. This is where we're going. Let's dive into it.
Exactly. So let's dive into it then. Here's slide number 2. So the slide number 2 is usually the problem slide. In fact, I believe, and Jeff, correct me if you think this is wrong, but this is the slide I would say 80% of entrepreneurs get wrong.
Yeah, and I've seen you or heard you in multiple times in our podcast talk about the importance of defining the problem well. If you do that, then the solution comes easy. But this is where I think founders get tripped up more often than not, is defining the problem really well and spending enough time on the problem so that your investors understand that. I think they do the reverse. A lot of times they skip over the problem and then they spend like 80% of the presentation on the solution. And in a lot of times it should almost be the reverse. I mean, you spend the time on the problem, not 80%, but you spend time on the problem, and then the solution comes pretty easy.
Yeah, I totally agree. And I think one of the big things that people don't do in the problem statement is connect themselves to the problem, meaning, here's my background, here's how I learned about this problem. And here I have these like data slides. Here's some data to show there's other people who also have this kind of problem, right?
Yep.
This slide can be very, very simple. Um, but it does take a lot of work to do it very, very well. I don't have it here, but one thing that people can do really, really well is here are the three things that I noticed. And they're very, I would say, industry specific. Would you agree, Jeff? Not like globally specific, right? Like carbon footprint or something like that. It needs to be very specific to like the buyer, right?
Right. Yeah. And I think, again, especially early stage for founders that are earlier, you're going to want to find that beachhead market. And so, I mean, you're tackling a problem that, resonates with a smaller group and not a global problem that everybody has, and you're going to solve the world's problem in this one slide.
Right. And yeah, this one takes practice. It really does. And with that, like Jeff mentioned, I think this one, if you're going to spend time, if we were going to break these down by time, I would say, what, 2.5 minutes maybe at the top end on this slide. Like, you could spend
Yeah,
the
going
majority.
off of a 10-minute. I mean, if we're
Yeah,
giving a 10-minute pitch, then yeah, 20% on the problem is probably a good benchmark.
yeah, I agree. All right, so moving on, and really, let me go back a little bit. If you're thinking about each slide as the response to a question, it really helps in your brain start to form this story. So, like, imagine Jeff just asked you, like, why are you here? And you're like, well, I want to solve this problem. That's really the response that you're trying to do from a story point of view. And so the next slide would be, how are you slaves? Okay, I understand that there's a problem exists. So how are you solving that? And so here's some things that you can do. One is to show how you're solving it and make sure you're tying directly to what we just talked about. You can do screenshots. You can bring the product in if you're in person. One thing that I would highly recommend doing or not doing is using a video. And there's a ways of getting around that. But one thing I've seen, and Jeff, maybe you've seen this, is the video doesn't load. Or I'll also say that sometimes a person is not that great at video creation. I mean, I'm not a videographer. Jeff, have you ever seen anything where the product demo did not go well?
Oh, for sure. I mean, we've seen it on our podcast even. We've actually seen a couple, they have gone well, but that is the exception. And I think more often than not, especially when you're in a live setting, I have seen the video portion just mess up the entire presentation. It ends up, making the presentation go over because they have audio difficulties. And it just sets kind of a bad tone all the way around. So I agree. I would stay away from audio visual stuff in your pitch.
Yeah. And the other one, demoing the product can be as simple as just what you think, 3 pictures. If those pictures solve or like show how you're solving the problem, I mean, really, that's all you need.
Yeah. Yeah. And I have seen people do demos where they've been demos, and that can also, especially if you're having to connect, have internet connectivity to get to a cloud-based solution, that can cause problems. So I would stay away from demos and maybe go towards screenshots if that's something that you're starting to get into. But like Tim said, I'd keep it simple and show pictures and you know, applications, I guess.
One thing we're seeing more recently, or that I've seen more recently, is technical demos. And I would say that's kind of a pre due diligence conversation. So maybe what I'll do is get a deck in the mail. And maybe you've done this too, Jeff, where you're like, well, I like what you got going on here. Can you show me the technology? And then maybe we'll go into due diligence, or somewhere in the due diligence process is more of a technical demonstration. So you don't have to do it here.
Yep, and you can always send links to recordings, afterwards as a follow up. I think that's always really effective if you've got a short, 4-minute demo or something you can send to somebody, and they've already been through the pitch and they're like, okay, I'm okay to watch this and kind of see how it works.
Yeah, totally. That's a great way of doing it. And it keeps you in communication with people too, which is always a good thing.
Yep.
All right. So now again, we're talking about question answers. So why are you here? Here's a problem I want to solve. Okay, so how are you solving that? That's the solution. And then the next question is, how do you get paid? And so going right into a simple business model is great. These first three questions are the business, right? The rest of the slide is going, or the slides are going to be more of convincing the investor that this is a good investment. And that's why I like these three slides connected to each other, because this really is just the business, right? No matter who you talk to, they're going to be like, oh, what are you doing? Oh, why are you doing that? Okay, cool. How much does it cost? And I feel like a lot of people, for some reason, and Jeff, you probably see, they skip this slide, or they put it really, really far into the pitch deck.
Yeah, that's what I see most often. In fact, I love the way you've connected that. So I don't see this happen very often, where they do connect all three and they go right into the business model here. It's almost like you go into the market size and then the business model. But I like how this ties in. One question I had for you, Tim, was when people are going through the solution,
Mm-hmm.
how long should they take there? If it's 20% on the product, how long should they take on the solution? Because that is an area I have seen people stumble on, and they end up spending the entire time talking about their solution. That's where people can get into trouble in talking over the heads of their potential investors, because they get so deep into it that all of a sudden, you're boring your investors because you're talking over their heads.
Yeah, no, that's a great question, and thanks for bringing that up. I think it's about the same amount of time as the problem, because you've just got to get through it pretty quick. I mean, about 2.5 minutes. If you spend the majority of the time there, and especially if you're just showing those feature sets that are the opposite of the problems that you're talking about, it will really help you get through that. If you have a million other features, we can show you later where those can come up more naturally. But like take an HR platform, right? There's so many features that have to exist. You could literally talk about that for a whole hour. But what we really want to know is what's different, right? And we talked about video before, like, don't show us you logging in. Like, that's such a waste of time, right? And it's not necessary. You have to log in everywhere. But I think that if you can get through this quickly by just talking about those couple problem statements and how your solution solves them, you'll move through this really quickly. And for those of you who are doing like medical things, where you're talking about, I always use this phrase like polymer ligase 85. I don't know what that is. I'm never going to know what that is. Jeff, maybe you could talk a little bit about that as well.
Yeah, again, it goes back to making sure that you're dumbing it down for your investors. Don't assume that your investors are experts in these areas that you're coming up with solutions on. I think what investors are more interested in is, is this solving a problem, and what kind of evidence do you have that it is solving a problem? You start to get into that in your business case. So go through your solution. I like how Tim says it, tie it back to the problem so it flows really well. And it should go smoother and possibly even quicker than the solution is what I've seen.
Yeah, I agree. And here's an example. So in my book, I talk about, let's say we were building a shoe company for populations who have like weak hands and they can't tie their shoes, right? That's a problem. And you could demonstrate really quickly how your product could solve weak hands, right? Like they could still tie their shoes with weak hands, right? So think about Velcro or something like that, right? They just slide it over. It's super easy. So that direct correlation is really, really quick to do if you've defined the problem pretty clearly. All right, so moving on here. So again, we got to talk about problem, right? Why are you here, basically? How are you solving those problems? What does it cost? And then this is the slide that really chokes people up. And I think tools like Forecaster are doing really, really great jobs of helping people understand how to put this together. Jeff, what are some things that you like and don't like about financial projection slides?
Yeah, it's kind of an interesting slide here because you want to show the growth and the growth potential that the company has in this slide. At the same time, every single slide deck has a hockey stick graph. This one right here doesn't have quite the hockey stick that you're probably looking for in a venture deal, but you're kind of expecting that, I guess, as an investor, is I want to see that this has some real big potential. I like how this has got a good summary. So it's got the chart, but then it's got a summary, and then you've brought out a couple of key metrics that you're showing, year 1, year 2, year 3. That's all that you need to show the investors. Don't get in. I've seen a lot of founders where they print, they'll put like a Excel spreadsheet in the slide and go, so here's our numbers. And they start talking about this Excel spreadsheet. Yeah, don't do that. What you want is enough information on there to pique the interest of the investors and to almost get them asking questions of, okay, how do you get there?
Yeah.
I see that you're going to have 204 users in year 4. How do you get there? And that's what you want them to ask. And then you want to be prepared on the back end to be able to go, oh, it's because of this, this, and this. And you want to know your numbers. So come across making sure that you know your numbers. At the same time, don't overburden your audience by getting into the details of your numbers.
Yeah, I totally agree. I think one of the things, and Jeff pulled out 204, and this slide's probably been up for maybe 30 seconds. It's really amazing as we've seen so many of these decks, we just start looking at the whole thing, and you'll also notice that in year 5 the number goes down for the number of users.
Yeah, you're going to have some questions there. And you better be prepared to answer them.
Yep.
Hopefully you're not seeing a downturn like this, but
no, I put it there on purpose, but it is a good thing because maybe your business model shifts at year 5, right? Or something like, so every year you should be able to talk about what might happen, or maybe you have a new product launch or something along those lines.
You move into enterprise or into a SaaS model instead of services. There's things like that, but you want to pull out the key metrics that are going to show the growth, and then be prepared to back all of that up with your knowing your numbers.
Yeah, I would say that a lot of people get this slide wrong, and I do feel like this is one of those ones that you should work with somebody else on. This is because it's what ends up happening is because we read these things so quickly, we can just tell what doesn't make sense, and we're really looking for red flags. And if you do this slide wrong, you just throw out all the red flags.
Yeah, one thing I'll mention here is what I've loved about seeing the group at Forecaster do is they'll help the founders build out the financial model with them, because I think it's important for founders to be part of building the financial model so you understand it and you can walk through your financial model with your investors as you get into due diligence. But I've seen them also train these founders on what numbers to pull out and what to put in a pitch deck that investors are going to ask about. And so I like your point of having somebody that has been through this help out on a slide like your financial projections. uh, just so you're doing it right.
And then one thing we didn't talk about is make sure that these numbers reflect your business model slide numbers. If you have multiple products that you're selling, I have a line graph here, but a beautiful thing you can do is a stacked bar graph. So, for example, let's say we had, in this case, users, clinics, and downloads. You could stack those by revenue, and you could show like users takes off, or clinics takes off, or however you're projecting these over time. Like maybe, for example, you do clinics but they have a reoccurring revenue model, and your reoccurring revenue model gets big but the number of new clinics stays pretty low. I love those charts because they're just so easy to read.
Yep.
All right, so moving on again. So we just talked about this. So tell me about the next 5 years, and then you reply, here's what that looks like. And then the next question is, well, I see you're going to make X amount of money in year 5. Like, how big is the market? And so a market assessment is really, really great. A lot of people don't do this slide very well because they want to inflate the market. Um, Jeff, can you talk a little bit about that and how you've seen that play out?
Yeah, and part of this goes into your financial model as well. I've seen a lot of founders take this and say, okay, huge market, which is obviously what especially venture capital firms want to see, is you've got a huge potential and you could move into these markets potentially. But then, getting in, defining, your obtainable market is often a percentage of, what the overall market is. And maybe you're taking a subsegment of the US or something that, this is a global market, and you've got the US market, which is what we're going to kind of, we think is really addressable right now. And then we're going to focus specifically on this subsegment initially. That's the way I see it defined. At the same time, you want to make sure that your market is big enough to be appealing, but there's got to be some justification to it. So I think one of the things that we've seen in some of the presentations is either their SOM is too small, where it's not appealing, and you almost want to go back and say, well, there's other avenues here that you guys can move into, and maybe we broaden out that definition, or it's too big and you don't know how they really got there, and they're just taking a top-down approach for their revenue as well. And they're saying we're going to get 1% of this market, and they back into their financials based on their market assessment and doing what's called a top-down approach instead of building it from the bottom up. So those are some challenges I've seen with the market assessment.
Yeah, I think a good company that did a decent job with this was Aaron, one of our earlier episodes. And, their SOM was really like, here are the 5 cities we're going after. Initially, we're starting in Utah, and then we're going to branch out into, I don't remember what they said, but let's say hypothetically it was Nevada or California. And it was very specific, like these cities.
It was still big enough that it was, exciting, right? It wasn't like there's, 100 people in our obtainable market that we're going to go after over the next year.
Right. And think about it this way, when you're putting together the TAM, which stands for total addressable market, it's all the people that have that problem that you talked about at the very beginning, or potentially have that problem. So when you're putting this together, think about it because there used to be a slide in Guy Kawasaki, I think it's Guy Kawasaki's template, a go-to-market strategy. That slide's kind of disappeared in a way, because if you really do a great job on the problem, then we already know who the buyers are. And then now you're using this slide to reiterate how many people could potentially buy it. And so that go-to-market is kind of taken care of between the 2 slides.
Yeah, and then just to follow on to that, your serviceable addressable market is a subsegment of that, of what you can realistically serve with your given limitations on what your solution is. And then your serviceable, obtainable market is kind of what you're going after, what you can really obtain out of that addressable market.
And that's a good point. And one thing to think about too, as you guys are putting these decks together, is your SOM, whatever number that is, and your year 5 projection. That year 5 is some small percent of the SOM, usually. If you came in and said our SOM is 80 million, and in year 5 you're going to hit 80 million, that puts up a red flag for an investor being like, you have no idea what you're talking about. There's no way you're owning the whole market in 5 years.
Right.
So keep those numbers in mind.
Again, just to reemphasize that you're building that financial model up, and that year 5, model that you've built from the bottom up is going to reflect a percentage of what you come up with, in your SOM, not vice versa, where you figure out your SOM and then you say it's going to be 3% of this. Do the bottoms up approach when you're building out your financial projections.
Totally agree. All right. So great opportunity. We know how to make money. We know how big the market is.
A quick question for you, Tim.
Yeah.
I would love to get your take on how much time are you spending on kind of these slides?
Yeah. So if we look at business model, if you do this cleanly, you don't need more than about 30 seconds. If you go into the financial projections, again, no more than about 30 seconds. And then the market assessment should be no more than 30 seconds.
Yeah. This is a section that should go really
quick. If you find yourself talking about it a lot, then that means you didn't do a good enough job in the beginning.
Good point.
Typically. All right. So the market's huge. There's got to be other people that are doing this. Then we love to see a competition slide. I call this an I love me slide. Jeff, what's some things that can go wrong here?
Yeah, this is an interesting one, because a lot of times we've seen companies that actually just leave this out, and we always tell them, well, go back and read Tim's book, because
yeah, right.
That's the reason you have a template, is so you don't leave important things out. This is super important. I think what we see a lot of times is sometimes the features that are listed aren't really that meaningful. And so you might say, well, we offer, I saw this funny meme where it showed a Rolex watch and then a frog watch, and it did a market comparison and said, tells time. Yep. Mm-hmm. Both of them, is green and has a frog. Yeah, we win clearly. Right.
Yep.
So, be careful on how you're matching up features, make sure they're meaningful. And I don't know if you have another template for this, but I also like the competition landscape models, where you can kind of see a different way that you might differentiate yourself. Because the key thing here is where your key differentiators are, where you stand out from in the market. That's what you want to come across here in your competition slide.
Yeah, I agree. And one of the things that you can do with a slide like this is reiterate your problem statements that you had at the beginning. So those first few features should be the problem and solution that you're talking about. Because again, this should be about a 30-second slide. But it's been what, maybe 5-6 minutes at this point. And we really are listening very intently. And it's not that we forgot, but it's a good place to remind us of what's happening. And so I talked about earlier, if you have a ton of extra features, you can throw it on the competition slide, because like Jeff mentioned, some features just have to exist. And maybe they're not key selling points, but they might be fringe selling points that make you just enough different than, some other competitor. Right. Yeah, this is a funny slide because a lot of people leave this one off.
Yeah. What are your thoughts about, because I've seen certain companies tend to do better with a, market landscape, here's where we're at in terms of, a matrix almost, and here's where the competitors are. Where do you see that being more applicable than something like this, where it's more of a checklist?
Yeah, so I think it's if you're doing something where you can't do straight features, like for example, I'm trying to think of the companies we've seen recently. Most early stage companies can compete on features. When you're going into what was that, Jeff?
That's an interesting point.
But if you're trying to do something bigger, so for example, the company I'm working with right now, we are trying to compete with the big guys. So we're trying to basically rebuild a new CRM. So in that type of thing, place where there is a real big market niche that you're trying to carve out, but your product is very similar to other ones, you could. It's a really great to do a different version of like, let's say for example, it's like email building. Okay, all these platforms have it, but they're missing maybe a ticketing system, which is required for this specific industry. Um, you can do things like that where you have, well, there's a bunch of other single competitors in this space, but no one's connected them together. And I love using logos for that. Like you
Right.
might, where it says them, you might list a whole category like donors, for example, and list all many products that are in the donor space and show like they don't have a fully functioning CRM or an email system or whatever. One thing to think about, it's not done very well usually, is a 2x2 metrics, which is really common in consulting. And I think a lot of people get pitch help from people who do consulting at some level. Um, and the reason it's not the greatest one, it can work, and we've seen a couple on the show that do work, is because people don't set up the metrics properly, right? Like it'll be like expensive and cheap. So for example, like the Rolex, right? They all tell time, but we're trying to build a cheap frog, marketplace or whatever. So I think that competition slide like this is easier to put together, where the other one might not actually convey what you're trying to convey.
Interesting. I've worked with a number of founders where, I've helped them build both,
Yeah.
and it can be really helpful to have both of the, have it laid out in multiple different ways, and see what resonates with, tells the story the best. But this can be a tricky slide, and maybe look at examples of other similar companies, that you can kind of refer to when
Yeah,
building this
I
one
agree.
out.
Always test out the slides. Like that's a big one. All right, so again, back to this question and answer thing. That's cool. I see the landscape. I see how you're better than people. What have you done so far? And Jeff, would you agree this is, after we've learned about the business, this is probably the most significant area of your deck?
Yeah, this is where your ears are going to perk up and say, okay, um, what have you done? So
Yeah.
you notice we're looking backwards first here. What has been accomplished? What, that you're going to give me some confidence in the team and the traction that you've got. And honestly, this slide is often missing in some of the pitches that we're seeing.
Yeah.
And I think it's so important because, again, this is an attention grabber of, okay, now we're seeing where they're at. We know what's coming because we're going to see where they're going. And we want to see that there's a story here of traction.
Totally. And what's cool about this slide, honestly, how many times have you got to a slide and at this part of the thing and you're like, wow, I can't believe you've done that already?
Yeah, this is kind of a brag slide. It's
Hmm.
like, hey, this shows how great our team is. Look what we've already accomplished.
Yeah.
So,
So to follow, there's multiple ways of doing this. You can do like client logos. I love that, seeing that slide. You could do news articles where people have highlighted you. Like if you were in the New York Times for some reason, maybe you've done a crowdfunding campaign. Any of these things, and they can take up their own slide. You don't need to cram everything on one slide, but it's really kind of a timeline of events. And like Jeff's mentioned, brag, like tell us how amazing you are, or in this company, I should say, not you yet. So the next slide is, well, cool. I see what you've done now. The next one's going to be, where are you going? And in this slide, this is going to be the milestones you plan to hit. And Jeff, what do you think about on this slide being with or without funding? We get that question quite a lot.
Yeah, I tend to see it with funding. I like it when founders know that they still have a pathway even if they don't get funding. And
Mm-hmm.
so I see that, and what gives you confidence is this is the team. They're going to make this happen regardless. Do I want to get in as an investor and help them to expedite this timeline? So if
Yes.
that's what you can show me is that, okay, this is where we're going. And if we have a little bit of capital here from you, Mr. Investor, then here's where we can take this. I mean, we can get here faster um, as you help us out with capital. So
Right.
that's the way I kind of look at that. At the same time, it feels good when they still have a plan. It's like, hey, capital's not going to be the only thing that solves our problems. It's going to just get us there quicker.
I totally agree. And one thing to think about on this slide is all of these should be yes nos, meaning in X amount of time, did you accomplish that thing? Yes or no. So the way you write this up should be very much like a task list in a way, right? Um, and then from a timing point of view, how far in advance do you think founders should go, Jeff?
How far in advance of?
Like, what's this timeline represent?
Oh, so looking ahead, I mean, I think you start to look at, some of the inflection points of the business. So define what those milestones are probably for the next, at least where your funding is going to get you to raising the next round of funding,
Mm-hmm.
or a certain milestone that's going to make you more attractive to get that round of funding. Those are the inflection points or these milestones that you want to point out. And I would kind of go, be looking out, probably 2 to 3 years is probably, a good line of sight. At the same time, you want to focus, make sure that you're also focusing on the short term, get lots of short term milestones that you're going to hit to get you, because typically you're raising enough capital to get you through the next, 12 to 18 months.
Yeah, 12 to
And
18
that's
months.
where we're going to be really focused. But we want to see there's also, a broader vision of where that takes you from there.
Yeah, so I would say with this one, really make sure you hammer out those milestones you plan to hit in this current funding cycle. Like Jeff mentioned, here's the main thing we're trying to do. Maybe it's get 2,000 customers or 100,000 downloads or whatever that are going to get you to the next value inflection point is the terminology, so that you can go and raise that next capital round. And then if there are some big ticket items, I've seen this slide done in multiple ways, Gantt charts, just lists. They all can look really, really good. But if you do something longer term, that 3 year plus, we kind of lose, I wouldn't say a ton of confidence, but that's really predicting way out, like 5 years from now, like that's so far away. Really focus on what the funding might do for you today.
Yeah, good points. And
So
this is a slide that we see not included in a lot of decks. This is
yeah,
something that is skipped a lot.
especially with early founders, because they're just like, I need money. And you're like, to do what? That's this slide. Um, and so this slide, we didn't talk about time, but in the last slide, again, I think that one might take a little bit. If you've done a lot of stuff, spend some time there, maybe up to a minute on the traction slide. And where you're going, you can spend, 30, 45 seconds on this slide. Okay, next, team. This is one of those slides that can truly kill a presentation. And a lot of people spend way too much time on here. I've seen people probably spend 5 minutes on this slide alone. And usually it shows, in my opinion, like a lack of confidence. But I think on this slide, no more than a minute, but make sure you hit some really important things. Jeff, what do you like to see when people are talking about their team? Or not like?
Yeah, no, I think this is a critical slide, especially early stage founders, because the investors are really betting on you as the founder that you can build a good team and that you have the support that you need to actually execute on what you've just presented. And so this is where it kind of solidifies all of that. I think a lot of this goes back to you want to see experience. You
Mm-hmm.
know, if you're lacking it in the team, like your day-to-day operations team, then that's where it comes in as advisors. You know, you want to have some confidence that you've got people, that you're surrounded by people that have done this before, that this isn't your first time around. That's what you do want to see, is that experience. The other thing you want to see is folks that are related to the problem you're solving. So make sure that there's relevant experience in the domain that you're going after. And typically that's going to be in your operations team, but supplemented with different advisors. I see there's 6 advisors here. I don't know if that's too many, but I think bringing out your key points that you have to have. You're going to obviously have an operations person, probably a technical person, and somebody else on your operations team. Make sure you've got all of those key things covered, but then supplement it with advisors that have some expertise in domains that can be really impressive.
Yeah, I totally agree on this. C-suite for sure on this slide. Make sure they're, even if they're unrelated, make sure that when you say why this person, tie it to this industry or however you can make them sound like they're the right person. Obviously, a lot of times we start companies with friends or whoever, former colleagues. Um, and so, but there may not be the right person in the future. So keep that in mind as you put these slides together. I put 6 on here just because it balances out the slide. It had nothing to do with the quantity. But only mention advisors if they fill in these gaps. So if you're doing a cybersecurity play and you don't have a cybersecurity person on your team, then you're going to want to mention that advisor who brings that expertise to your team. The other one that you and maybe they're not an equity holder. If they are an equity holder, meaning they've put money into your company, you can bring them up as well. But spend very little time talking about the advisors. They're not as important as you think they are, unless you have a super well-known person, either locally in your ecosystem or industry-wise. Like if you had Mark Cuban as an advisor, the majority of people know who that is. And so that would be very credible to your team. And so definitely bring that up if that's a person on your thing.
Yeah, one of the mistakes I've seen on this is where they include too many of their team members, and it just crowds everything out. You want to make sure that you're highlighting the executive team, and there might be some supporting roles there, but you don't want to have this show your entire employee base.
All right. Okay, so team spend, I don't know, what do you think, Jeff? A minute at the most on this one? I don't know what our timing is like, but you can spend time here if you need to.
We're getting close. We're getting ready to wrap things up here about this time. So,
all right. So the next slide is going to be opportunities. And we had a VC on the show not that long ago. They don't want a slide like this. Some do. So you have to know who your audience is. But as an angel investor, typically we want to see that you have a path to exit. And so what you can show us, again, because of a lot of times we aren't super familiar with the industry that you're in, not like a VC firm might be. But like show us some other companies that are similar, who acquired them, how much they were acquired by, and then maybe some other ideas on what an acquisition could look like. We don't see this slide very often on our show either. But I will say in person, this question actually gets asked a lot more than you might think.
Yep.
Another thing you can do here, and I don't have a slide about it, if you are in a specific industry, so let's say, for example, you're selling into dental clinics for whatever, and you think you can expand into chiropractic clinics, another opportunity slide might exist where you can say, we're starting here, and then we're going to go into these categories, which would make us really appealing to some of these companies.
Yeah, I was going to say, I have seen this slide done well,
Yeah.
where if nothing else, it shows there's a lot of activity and interest in the space that you're in. So it's like this company is acquired, on this date by this company, and it just shows there's some activity there, and that you're looking ahead and you're aware and familiar with the market. Don't spend too much time on this,
No.
but it can be a powerful slide.
Yeah, one thing too, if you do put a slide together like this, make sure you know some of the metrics of the companies you've posted. So, for example, let's say you're a shoe company and they got acquired. So, like, I don't know, Bluebird or whatever that company's called. Like, know what their revenue numbers were at acquisition, because that's the metrics that people will use to say, oh, actually, I think I can see how they're going to get to those numbers pretty quickly.
Yep.
It's a little insider tip right there. All right. So, and then finally, you're going to basically repeat the summary slide if you're going to use that. And this is the ask slide. Again, it's been about 10 minutes. So real quick reminder, throw your logo on the slide. Tell us what the ask is. Give us as much details as you can. Jeff, what should people do if they don't know the details of their ask? Because we see that a lot.
Yeah, I think you have to know how much you need. I mean, if you're going to, you have to wrap things up with, hey, this is what we need. And so, you may not know whether you're going to do a safe or a convertible note. I think it's good to throw that out there, but it's not essential. I think you'll get asked that, and so be prepared. And definitely know what a safe is and a convertible note as you go into, and what a cap is. So I would definitely be able to talk to that, and put out how much you are looking to raise. We do see this left off, which is crazy, that you almost feel like, okay, so you just told me the joke and you forgot to tell me the punchline.
Yeah, totally.
You're leaving me hanging here. I don't even know, what do I do with this? And so I think this is a critical slide. And as Tim will tell you, it's a great slide to end with. If you can end with this up there, as an investor, you're going to be looking back at this going, okay, this summarizes what we just kind of talked about. So I think this is a slide that gets viewed multiple times, and that it's a great place to end on.
Yeah, I totally agree. A lot of people will leave off a lot of the information on here. I know a lot of people want a thank you slide or a contact me slide, but literally you can put, like I put the website down here at the bottom. You could put your email address or your phone number. You could put it all on the bottom, and it doesn't distract from the point of this slide, which is really the close. And I've seen this slide up for 10 minutes before, where we're just having a natural conversation about the company, and they never moved on from this slide. And so we talked about how the other slides, 2 minutes, 30 seconds for the section. This one slide usually gets the most airtime. Not always, but I would say 90% of the time gets way more airtime than any other slide in the deck. And then make sure you put your use of funds. And the use of funds should be like, we're going to hire 2 salespeople, or we're going to spend this amount of money on marketing. And then those milestones come from the slide we had earlier, is this is where we're going. So with this allocation, we should accomplish these milestones. And yeah, I don't know why this slide, for some reason, people just don't do.
I love the way you've put this together too, because it includes a lot of information that I'm going to ask as an investor. This is information I want to know, and I can easily refer back to it if you end on this slide.
Jeff, this is the last slide. Any other, things that you've thought about throughout this that people usually miss, or, common questions you hear about?
I think the ask does need to be clear. And, I really like I'm liking it more and more that you've got this mission to get rid of, the thank you slides at the end. And so I'm adopting that philosophy with you, Tim, and appreciate your
Yes,
wisdom on that. So you've got one convert already.
let's go. A couple things I will say, just to think about is make sure you choose colors wisely. Um, if you're presenting from a computer, the colors look really, really good. So if you're sharing on Zoom or something, you can typically get away with any color combination. What we had recently happen is a person used a really light background, like a white or a cream, and they used like a light gray textual font. And I've seen this happen a couple times when they're presenting in person on not a quality screen. The font just literally bleached out,
That's
and
weird.
so it looked like they were presenting white slides.
Yeah.
So if you can, make sure you practice this in different presentation environments. I know that's a lot to ask, but try it out. Make sure that you're giving the presentation that you want. Yeah, I've seen it happen with white and light green. And so just make sure the colors work out well. And
Yeah.
another thing that I'll say is make sure you practice. And obviously we're talking with people who usually haven't practiced yet, and I love working with those people. But I've had really, really good friends go to pitch, and it was like they didn't care, and so they showed up, didn't practice, or they put the pitch deck together the day before, and you can really, really tell as an investor. Like, it's like, why are you wasting my time? You don't even know what you're talking about. So really practice these things, like, I don't know, Y Combinator and stuff. They make you do it like every single day or something.
Yeah, and there's
Yeah.
a reason for that.
Yeah.
When you get a founder that has gone through this hundreds of times, it comes across, and that they know their pitch really well.
Yeah.
So one other thing, Tim, that I think we didn't hit on, and it seems like it comes up almost every single episode of the podcast, is crowded slides.
Hmm.
Having too much text, and the text is super small, and so it becomes distracting. And
Yep.
so that's something, to be careful of. Don't use too small of fonts that people are going to be squinting to read, and don't, put huge blocks of text that people are going to try and read as you're talking over it. So, Tim, I think you've got some good points on that in terms of font size, but also of being able to read as along with the presentation.
Yeah, so I would say we use this 22 font size as the minimum. I think this hits all that. I don't remember exactly, but if not, it's really, really close. The other idea, and we talk about this, is half the age of the oldest person in the room. So if they're 70, then no smaller than 35. But typically 22 will get you where you're trying to go, regardless of this little rule. And real quick, like, look at how few words, like even the team slide. I know we're using a lore ipsum on here, which is just some dummy text, but that's a lot of text to try and read when you're going through these slides. So less is way, way better. I'd rather listen to you and then get some cues of your text as
The
I'm
more
going
you can
through.
use logos and
Yep,
images, things like that, the better, and then you're not distracting people from reading while you're talking.
totally. Well, great. Anything else, Jeff?
No, this was awesome. Tim, thanks for sharing these slides. I thought this was really a beneficial session, and glad we did it.
Yeah, no, me too. This is fun. I mean, obviously, I wrote a whole book about this. There's more to it than this, but I would say from the presentation style, this really is the crux of it. Keep it simple is way better. It'll get you way further than you think. Like, everybody wants to over talk a pitch, and all you got to do is get me excited. And The goal, and we didn't say this, but the goal of a pitch deck is not to get funded today. I've never seen it happen. I will probably never see that happen. The goal is to get to the next meeting. So if you can get me to be like, man, I like you, this idea is interesting, let's talk about it, then you've nailed it. You're good.
Yep. And that's what is the last question we always ask on that podcast is, would we take you through to due diligence? Do you get that second meeting is kind of where, it ends.
Well, great. I hope that was helpful. If you have any questions, please reach out. Check out the book. It really does walk you through what is expected in each of these slides. And check out Forecaster. If you need help with your financials, always have somebody else who knows what they're doing look at them, because they really are that important in this deck. Especially because that's usually the first thing you discuss in due diligence is walk me through your numbers. So check them out. Links are always in the description. And we'll see you guys next time.